Okay.
I hope not.
Right. Okay. Just a few quick welcome back. And I wish it was the multinationals we had before us, but you're the second best in relation to this. Yeah. Just the context was set this morning, wasn't it? And you know well, it was the Controller and Auditor General's chapter and the variation in the collection of corporation tax. The level of 12.5%, but the effective rate ranging from 12.4 down to 0. That's the context for us here, really. And so this morning, I don't know if you've seen, we're looking at any of it, but I'm sure you were. But we've mentioned it, my colleague here has mentioned, and other colleagues, research and development, and the ways for legitimately avoiding paying tax. And so for every €4 spent on research and development, €1 comes back. Is that right? Okay. And that's using that legitimately, a number of big companies don't pay any tax at all, any corporation tax. Would that be, would you have figures on how many don't pay tax?
I think I don't know whether it's useful to go back to our hearing on the 30th of November where we talked about the 13 companies that paid less than the 12.5% rate, and whether it's useful to read back
That's okay.
the issues on it. And the Controller's report sets it out very well, and tables around the effective rate. So so we know there's a variation. Yeah. And what we've been led to believe is when we have headlines saying they pay nothing, that's a bit unfair because there are many legitimate reasons why they don't. Isn't that right? Yeah. So that's the context. So therefore, if we look at research and development and the knowledge box, which I'm sure the chairperson is far more knowledgeable, and we'll come back on that one. But if I stick with research and development, and so for every €4 spent, there's one. Okay. How do you monitor that? So I looked at everything I had here, and you audit randomly, is it? You audit? No. Tell me how you monitor or audit that research and development is research and development. We monitor all risks having regard to our risk analysis system, our knowledge of what's going on in the sectors and the companies. So in 2016, we carried out 270 interventions in respect of R&D claims. Okay. Of those 270 interventions, 93 of them resulted in a yield.
93?
93, and 177 resulted in a nil yield. Okay. In 2017...
And just stay with that. That was 16, was it?
Yeah.
Okay, and of the yield, what was the yield?
The yield was just a small fraction short of €13 million.
13 million?
Yeah.
Okay.
And we can provide
No, that's okay. I
want
to get just to know. So there were 270 interventions. What percentage of that, what is the percentage of the overall companies you're looking at? The 270 interventions that yields 13 million? Our audits and interventions in 17 would relate to previous years. So in 2015, there was 1,532 companies claimed 1,532
in 2015.
In 2015. And so generally
1486 in 16 from a PQ.
And generally if you're carrying out an audit, we're looking at a year before or the year before that. So activity.
We'll take 15. So and you looked at it was a bedrock of 1,532. Companies availing of research and development. Is it?
Some of those
availing of research and development
credits.
Lovely. Okay. And you didn't examine all of those?
No. We operate a self-assessment system in which we carry out risk-based interventions. Companies, a lot of the companies, again, in the R&D area, are in an ongoing, continuous, Deputy Murphy would have talked about some of them, would be an ongoing, continuous process. So we would look at them periodically, and then if there was a once-off company claim, we might look at that because we didn't know enough about the company.
Okay. So in 2015, what did you get back? as a result of your interventions?
In 2000 and I gave you the
you gave us
17 figures. The 2016 figures, we carried out.
You gave me the 2016.
17. I'll give you the 17 figures now.
Oh, okay.
In 2017, we carried out 250 interventions.
Okay.
90 of those were yielding.
Okay.
And 160 were nil yielding.
Okay. And how much did they?
We recovered 16.7 million.
16.
16.
Okay. So slightly less yielding, but with more money.
Yeah. Yeah.
Okay. And less interventions. Less interventions.
Yeah.
Less yielding, but more money.
Yeah.
Okay. And why were there less interventions then?
You see,
the risk-based.
The risk-based,
yeah, okay.
and then the mix of interventions depends. It also depends as well. Some companies or some cases will be more protracted, will be longer, will be more detailed. There's a lot of factors in our mix of interventions.
Is that yield? Is that a repay? A repay, is that what that is?
What will happen in the yield, in some cases, it will be after money has been paid. In some cases, the claim will be checked before money is repaid. Okay. So it's not repaid.
It's not a repay.
So it depends on what our intervention is in respect of, and the timing of our intervention. And we would have been, since the R&D credit was brought in 2004, and we have had a rolling intervention programme in respect of R&D. And it's probably a case to say that in the earlier years, record keeping was not as good.
Yeah.
Processes were difficult.
That's okay, because just for a moment, because give me. I want my overall view of this. So you've given me 16. You've given me 17. What was 15?
I probably don't have the figures with me, but there's no problem. We
did a chapter last year.
That's okay. Yeah. Okay.
In relation to that, the figures were lower. For 2015, about 178 interventions. About 13.5 million in total yield. I don't have the figure for the number of yielding cases just to hand.
And are these all different companies, or is the same company being picked on?
Generally, it'll depend. Some companies we will have, because they reappear all the time, and they'll have different claims in respect of different research and development, and some will be once off. So our programme, we talked about our large cases division. One of the reasons why we have a large cases division is where we can have a deep understanding of what goes on in large companies that pay most of the tax. Okay. And that's a rolling programme. And in other cases you have, like of the companies who claim R&D, about 80% of them are small companies.
80%?
Yeah, but smaller companies, I suppose. Yeah. But they are only claiming probably less than 40% of the total amount.
Right. The
large companies are carrying out the largest element of R&D, and so they have lesser claims but for more money.
I understand. And you avail of outside expertise in relation to this analysis. Tell us a little bit about that. What is the cost of that, and how do you manage that?
The controller carried out a review of the whole R&D credit last year, and a chapter, and we touched upon our experts. What we do is we engage experts in the particular field, generally academic, but sometimes from industry, to look at what we call the science test. We're tax officials. So when we are carrying out an audit of a particular R&D credit, if for example it is something to do with biology or something like that, we will go and we will tender. We have a panel of experts.
You seek out the appropriate expertise to advise you.
Yes, and there's a figure for the cost of that every year. Is there? There is, but
we had a figure for 2015. A total of 18 experts were engaged by Revenue at a cost of just over 140,000 in total. Okay. It's relatively small.
Relatively small compared with the yield that you're getting.
Yes, I suppose the issue around the yield, there are two issues with R&D that yield can occur. One is if the research and development fails what's called the science test, and the other is that if it fails the accounting test. So some of the yield, and probably the biggest proportion at this stage probably has to do with accounting rather than science, because we've issued very detailed guidance around the R&D credit. It's now in place since 2004, so there's 14 years of guidance and advance notice on R&D and what comes and what a company is entitled to claim. So our experts will go in and look at aspects, and I've seen some of the expert reports. They are comprehensive, detailed analysis of science. And as you can imagine, if we have an expert in the field, the company has probably 3 experts, and for that process, and there's a huge engagement on those aspects.
I don't know what I've left, Chair. A few minutes of it?
2 minutes, yeah.
Just in relation to, you identified, G said, the Section 110 and the way it was being inappropriate, or it was being used in a way never envisaged. Are there other issues emerging now that you've identified?
I suppose what we're always doing is actually looking at what's going on in the economy.
Is there a specific team doing that?
Well, as I said, in our large cases division have responsibility for the financial services sector, and there's one of the branches in that is responsible for the Section 110 companies in its entirety, and they are looking at aspects of it. They deal with our colleagues in the Revenue Legislation Service to see what is involved, and then where necessary.
But I'd say the Section 110, I'd say a lot of politicians felt they raised that in the Dáil. I remember when you were before us the last time, and you're saying it again, that G proactively identified that, is what you're saying, the difficulties, and you flagged it to the government.
Well, we flagged it to the Department of Finance
at the time.
And I know that...
Proactively?
Absolutely.
So now I'm asking you, are there other issues that you're flagging proactively, or over the last year or two?
We're not at a position yet to flag anything else at the moment, but we constantly monitor the position.
But in due course, during this year, you'll be flagging issues?
I don't know, Deputy, it would be. Okay. But generally, and it's not specific to Section 110 companies. You see,
I'm just trying to identify, sorry now, you talk about risk analysis and so on, and if we go back to the politicians, and some of them did a great job on the Dáil on the Section 110s and explaining it to us at the time, and I wasn't up to speed on it at all. But you're actually saying you were proactively looking at that.
And I think
that's okay, but my question is, are you proactively looking at other issues as well now?
We're looking at what is within scope of the Section 110 companies, but not solely. We look at that in across the board, but there's no specific memo being sent from Revenue to the Department of Finance on this issue.
No, any issue, risk issue, when you identify issues.
I suppose it's very difficult to give an answer to that. We have an ongoing engagement with the department, and we'll be talking about, we wonder, is there something going on?
I suppose when we look back on the 110s, if you were so proactive, and I accept that you were, one wonders why it took such an effort in the Dáil and so much debate in relation to that specific 110s to change them. But, is there a mechanism for changing when you identify problems that it goes forward and actions are taken?
Well, Deputy, there's a process every year in the context of the finance bill. Like the legislation has to be changed. I
know that. I know. I'm talking about G role. I'm talking about G role in proactively coming forward.
Well, there was considerable debate about Section 110s. Some of it had nothing to do with tax. So our role is in respect of tax provisions, and it would have been come out in the various releases of freedom of information and tax strategy papers around the property issue.
Okay. All right.
Around 2015.
Okay.
It then has to go through a process.
I understand that. Just two final things. One is residency in 183 days, and the second one is apple. So I'll just bite into that apple for a moment now, just on a general. And I was making this point this morning, and I just lost the page. 36. And again, I don't expect you to comment because it's a case, but I want to run something by you in relation to the acknowledgement that the two companies in question that were operating in Ireland, the ASI and the AOE, the two companies that were Apple Sales International and Apple Operations Europe. Now, they were taxed for the purposes of their activities in Ireland, but the head company was resident nowhere. Isn't that right? That's accepted, that the head company was resident nowhere for tax purposes. That's accepted.
Well, Deputy, the issue around Apple and the changes that were made in relation to stateless companies in the 2014 Finance Act is trashed out.
No, I understand that. Now I only wanted to get it clear in my own head. So it was accepted that that company was stateless. Nowhere was it going to pay tax, where most of the profit was going into. Isn't that right? And just, we'll take it away from Apple. We call it Orange. We call it anything you like. So, in other words, there could have been other companies doing exactly this.
I suppose the issue is that, as I said earlier, our job is to ensure that they're paying the Irish tax.
No, Mr. Curtis, I'm not asking.
Sorry, Deputy, just let me finish the sentence.
Okay.
The issue about where the tax is ultimately due, I think that our colleagues in the United States would see that that is ultimately US tax.
We heard, was it Mr. Keegan this morning in his briefing paper, and he updated us, and he was a fairly neutral person when he set out. And he set out, taking ASI as an example, the ruling allowed a split of the profits recognised by ASI in Ireland. The majority of profits were allocated to a head office within ASI, with the remainder and so on. Irish corporation tax was applied to the profits of the Irish branch. The head office was not tax resident in any country, including Ireland or the US, did not have any employees or premises in Ireland, and was therefore not assessed. I'm not asking, please, that's factual is all I'm saying. Do you accept that that's fact? And my question then, no, you don't. Okay.
Is that the Commission's perspective?
No, that's...
It's about Ireland's perspective.
Yeah, that's okay.
Madam Chairman, I think we need to be careful here because we are talking...
Okay.
I don't want to draw us into a discussion around the parameters of a case that is...
I'm going to go back to a general point.
Yeah.
Before things changed, all changed utterly, didn't it, in Ireland after this? Other companies, am I wrong in saying other companies were doing exactly this? They had head companies that were stateless. Is that right? And that has changed completely in Ireland.
I think the situation is that the Irish rules provided that a branch was taxable in respect of its Irish
activity. I know, and you're very consistent about that, and I'm not questioning that. But my question is to anybody here, any other company was doing the same thing, were they? Could have been under the existing law in Ireland. You could have a stateless company get most of the profit and not paying tax anywhere. Am I wrong? Just tell me I'm wrong.
Ronan, just in terms of the change we made.
No, not the change. I know there's been a change. I want to know the position then. Were companies doing this and allowed to do it before the changes came? Is that a difficult...
Insight into the actual arrangements of individual companies, Deputy, so it is difficult.
But no questions were asked under, because there was no need to ask questions under Irish law at the time.
But I think that the revenues purpose and work around this is very much in the application of the Irish law.
Right.
So it's difficult for them to go further than that. And that's what the Chairman's been saying.
Okay.
I suppose the issue is, and we've said it all the time, is that this is all about mismatches between different countries' rules. And this is what the base erosion and profit shifting program...
no country.
Sorry,
or no country, more to the point. Not difference between different countries.
It actually is a mismatch.
Country, but no country.
No, but it has to be a mismatch between two countries' rules. Our view of a branch is that the company belongs somewhere else. The other country's view is that it doesn't.
But there was no other... All right, I'm not going to hammer the point, I've said it. My last one was just the residency. Just, please, if you could talk me through the residency in 183 days. How do we know information? Do we know how many individuals come under that rule or are outside of that rule? Or put that in context for me, an individual's tax residence.
I think we've talked before about residence rules for individuals.
Yeah, and clearly it's 183 days or more.
And there's a lot of Irish people who are non-resident, and they've happened to leave the country in the last while, and we're really talking about a small number of probably high wealth individuals. Is I think what you're really talking about.
Well, I just wanted to put in context.
Yeah, relatively small numbers come into the category that you are talking about.
What numbers?
I wouldn't have that number with me, and we don't have. There's a small number of people who are in the category you're talking about. I wouldn't have the numbers with me. We don't capture all of those numbers.
That's what I'm wondering.
But we would be actively monitoring and managing in our large cases division our high wealth individuals who are non-resident, who have a significant relationship to this country.
And how do you do that if you don't know?
We do. I suppose we know who are. See, a lot of these people have a close relationship with Ireland,
right?
And the file tax returns
in Ireland.
Yeah. And
so
we
you
would
know them from there.
Yeah, and we would have that, and it may be a case that we can come back to the committee about specific numbers.
Yeah, you can send us a note.
Yeah.
Okay.
Yeah. Thanks, Chair.
Okay, thank you. Just one.